You go up to your friend James and you say, James, I'm going to make you a deal. You're going to pay me $1,000. And then in return, I'm going to pay you $500,000 if your just house burns down for some unforeseen circumstance in the next year. And James says, that sounds like a good deal to me. I'll make that deal. And then the next day, James's house is burned down. Now, are you just going to jump on your internet banking app and pay him out the $500,000? No, of course not. You're going to make sure that you read that contract you made with James and he was doing everything in his end of the bargain. And then you're going to want to make sure that you investigate the house fire and make sure it was actually an unforeseen circumstances. He didn't just grab a bundle of newspaper and a box of matches and set his own house on fire and collect that $500K. And this is the exact same process that an insurance company goes through. You pay them a little bit of money. You want them to get a lot back in return if something bad happens, which they will pay out, but they're going to want to check that you fulfilled your end of the bargain and nothing untoward has happened. So they're going to read through that contract you made with them line by line. They're going to make sure everything that you told them was correct, and then once they've clarified this, then they'll pay out the money. So it's important that you've made all of the right disclosures up front so you don't get caught out when they go through this contract with a fine-tooth comb in the end when you need that payout. So that's the job of someone like me, an insurance broker, to help you disclose what you need to disclose to the insurance company so you don't get caught getting that contract voided when you need to get paid out because a massive disaster happens and your house is legitimately burned down for some unknown reason.